Hi everyone, hope you're all doing well, and today we're going to talk about the stock market correction. Now, I'm going to say this video was supposed to be the main video later on today. I'm filming this at midnight, so it'll probably get up maybe about 1 a.m, 2 a.m, but this was supposed to pretty much go up like midday tomorrow, but I'm probably pulling this forward because I'm probably going to be doing a workhorse video tomorrow talking about the big massive drop in workhorse. We'll probably be talking about what has led to the situation where the workhorse has dropped. We'll probably be talking about a certain Irish YouTuber and making sure he's all right after that big drop as well. So yeah, I'm probably going to bring this forward so I can get a workhorse video later on today. So there's probably going to be a little bit of a double upload a little bit later on. So keep your eyes open for that one. And also shout out to One Click Printer. They have sorted me out with a very nice looking t-shirt, I think. So I might wear this on a couple of videos. There's a screenshot here of their Instagram as well. And by the way, if any of you guys aren't following me on my Instagram, we've got an official JKR investing Instagram as well, so make sure you give that a follow as well. But we're going to talk about the stock market correction that's going on, and the things to kind of look out for, and the things to review with what's gone on over the moment. Now, I see a lot of YouTube videos out there at the moment that have got like crash in the title and stuff like this, but you know, we need to calm down a little bit. You know, I know there's the YouTube algorithm and getting the clicks in, getting the views in, but we are nowhere near a crash. You know, some of you guys that might have gone through the February, March time, you know, you guys have been through what it's like with a crash. This is nothing near what a crash is like, and I'll kind of break down some of the thoughts and hopefully really help your mindset over the next few days. At the moment, we did have a little bit of a recovery today. Obviously we had the big drop. It did kind of recover. We'll see what tomorrow brings. I mean, tomorrow might bring another red day, or we might see a bit of a rebound. We'll see what exactly happens with that point of view. But nevertheless, whatever happens, good or if it does go down, what I covered today should really help you as an investor. So if you could smash the like button. I have noticed the like button's not been smashed as much over the last few videos. So if you could, make sure you do click the like button, because it really does help the video get out on the YouTube algorithm without any clickbaity titles as well, which is also pretty good. But yeah, first of all, let's talk about the stock market correction. So it was obviously clear that we were getting into a phase where the stock market needed to correct. Company valuations were higher than what they were before CV, and it's like, well, we haven't even recovered from the CV yet, so why are we going to valuations that were even higher? And I posted this video back late January saying that there's a massive problem going on here with the stock market, and you know, fair enough, you know, a few weeks later we've had a bit of a correction. Now, a correction is something like a 5 to 10% correction. Obviously what you'll notice is a lot of more individual stocks pull back a lot more than the indexes. So whereas an index might pull back 4 or 5%, you might see individual stocks actually pull back maybe 10, 15%. That's always something that you've got to remember as well. But these valuations haven't made sense for quite a long, you know, and we've seen it even on like the YouTube scene, for example, where we see even videos now going to riskier plays, because there was this mentality of like, oh, you can just invest into stock market and not lose money, and people are getting more and more confident going for the riskier plays. And I think there was also some data that came out the other day that said basically like margins being used more than ever, and that's never a good sign. And just generally, like when you go down the street, you know, people that are your friends or your family that have never had interest in stocks are asking you about stocks, and that's never a good sign either. That's normally a sign of a really peak market that we're in. And obviously we've had a bit of a correction now, you know, 5 to 10%. And like I said on the video a few months ago, I said a 5 to 10% correction is probably what we will see, and we're kind of in that phase now. I don't think we'll go any more than a 10% drop. I think we have the potential to maybe go down maybe 2 or 3 more percent, but we're about roughly, I think, the drop where we'll get to. So I don't expect too many more losses. The markets go down much further than this, but these are little leeway of 2 or 3%. I think, you know, 5 to 10% correction was about right, which I said on the warning video a few weeks ago. Now, first of all, let's talk about this. How big is the correction? If we look at the stock chart, you look at the stock chart and it's just, you look at the difference between the crash, you can see on the stock chart, that's what a crash looks like. You look at the 2020 crash, you see the big drop. We've been on a great run. You know, the stock market at times will pull back. It's very healthy. And if you're a long-term investor, you will see more than just this one through your lifetime investing. You're going to see probably over 100 in your lifetime of investing. We've just gone so long without one that we've kind of forgot what one is like. But the thing is to remember as well is like how much of a good run we've had. We've all had amazing gains. And this is a great time now to buy that opportunity for you guys that have been building up your cash the last few months and buy a few more stocks at a lot cheaper prices. And that's the big thing, if you look at the stock chart, this little drop you can hardly see, you can feel it a little bit in your portfolio, but it's not a big drop really, and you've got to remember the good run that we have been on. The only little stinger is that if you've just started investing and you got at 52-week highs, which I always say never buy at 52-week highs. Obviously you guys will definitely feel it a lot more than everyone else, but realistically when we put it into the context of what we've been on a good run, we've been on a good run. We deserve a pullback, and and the thing as well is like corrections. I like corrections. Corrections are one of my favorite things in the stock market, because that stock that I've been watching for the last few months and I've been like, I could do with it being about, a little bit cheaper, and I've got that opportunity. And that's the big thing is like, the stocks that you've always wanted to buy, maybe the ones that you're like, I just need a little bit cheaper, you've got them opportunities now. The only little thing is that people now get them opportunities and then they're like, I don't know if I do want to buy it now. And that's one little thing you got to remember, just to have that confidence with. And remember, all these drops always recover. You look at the March drop, and I remember at the time I was like, this could be quite nasty, but in my head I was like, don't worry, a year's time we will recover from this drop and I'll be glad I invested. And it's exactly the same now, you look, if you're a long-term investor, you're investing for 2 to 5 years, this little drop, you won't remember it in 2 to 5 years time. It's buying now for what will benefit you in a few years time, and you won't remember this drop. Maybe you'll remember it as, I'm glad I did buy in that dip, but you've seen all the previous dips before. We've had dips with even worse news than what's going on right now. I mean, we're only kind of dropping because it's a bit overvalued, to be fair. So it's easy, in a few years time, you won't remember this drop and it will have recovered from here. And that's the big thing. So you've always got to have that kind of mindset. So when we look at what's going on, it's not a big dip in what's kind of going on, so we don't need to panic too much there. And just remember as well, you guys that had that confidence to buy in that March drop, how much are you guys up on your positions now? I mean, I'm sure some of you guys are up 50, 100, 150, 200% on some of them positions. So, that's always the benefit of buying on the dip. So that kind of ties into my next question, which is why corrections are good. Now, let me just take this in. I'm going to exaggerate a little bit just to make my point a little bit more clear. But let's just say I wanted to buy a stock and the stock was Apple. Let's say I wanted to buy this stock at $150. Now, if I believe the upside on Apple here from $150 was $300, then I'm going to make 100% return. I'm going to make $150 on my shares. Nice game. Now, if I still love the company, if I know the company in and out, if I know the fundamentals of the company, I have so much confidence in that company. In the short term, if that stock goes from $150 down to $100, and then I get my average down to $100, and your target doesn't change, you still think it's going to go to $300, but now what's going to happen is I'm actually going to then triple my money, because I could go $100, $200, $300. So I've gone from where the stock was at $150, think it could go to $300, and I can double my money. If the stock drops to $100 and I can get my average down to $100, same company, you've still got the same bull case of it, it's just sold off. You've now got the chance to make even bigger returns on that. You can make 200% on that company. You can then go and triple your money from that investment, $100 to $300, and it's just the same company. And that's the big thing to remember is that this is why I love it when the first 6 months I buy companies, I generally pray for them to go down. Because if my average goes lower and lower, my price target where it's going to go is still the same. And all that's going to mean is if it goes lower and lower down when I start buying it, in 2 years' time and price target is still the same, I'm going to make even more money from it. So when I start buying companies, I generally don't expect them to do anything in the first 6 months, and even better, it's better if they go down. So corrections are great because if you average in and get your price lower down, or you can even start a position in one of your favourite companies at a lower price, you make more money. And that is the thing why corrections are really good. That's why buying on the dips is really good. There's more upside. As long as you've got the confidence to carry on holding that company, no fundamentals have changed, your price target's still the same, you'll really benefit from making more money from corrections. So this is why corrections are really good as well. So I guess this kind of leads me to my last question, which is, Did I buy yesterday? Well, I think you can guess, you know, everything that I've said so far, what I've said here. Did I buy? Yeah, I did. I bought quite a bit. Previously, I was holding 30% cash. I have gone down to 25% cash. I have bought quite a few positions. There was also one on the UK front, which I'm sure some of you guys that follow my UK stocks probably guess which one that one was, because that did have a bit of a dip yesterday. But on the US front, I did buy quite a few stocks. I bought quite heavy. I used quite a lot of my cash up. I bought 2 new positions as well. So I will do a video going through everything that I did buy this week towards the end of the week. But if you do want to get in now and know what exactly I did buy, there's a link to Patreon. I always post on there when I'm buying and selling companies. So on there is currently a list at the moment of what I bought yesterday. But I will do a full video on that later in the week. But if you do want to get early access to that, make sure you join the Patreon, links in the description. But overall, I do hope you found this video a little bit useful and kind of gave you confidence that if you didn't buy in the dip, maybe consider doing it, because it is a pretty good opportunity. And if the stock market does go maybe down a little bit more than this, which I think we are kind of getting near the bottom now, but if it does go down a few more percent, you know, keep taking advantage of what's going on with these dips. And that's what I'm going to leave you with, and hopefully give you a little bit more confidence with what's going on at the moment in the stock market this week. And like I said, this video was supposed to be a few hours later. I brought it forward a little bit because, like I said, I'll probably talk about Workhorse in a few hours time anyway, so I could get it all in one day. So hope you enjoyed it anyway. Smash the like button if you want to start investing. Make sure you join free trade. There's a link in the description. You join through there, you get a free share as well. Remember, follow the Instagram, like, sub. I'll see you in the next video anyway.